we're live, ladies and gents. Let's go. Let everyone join. Welcome to the party. It's the final countdown. Yeah, here we go. Yeah, enough of this. I will half be pleased when this is all done and half be a little bit disappointed because I'm really looking forward to this evening. I'm really looking forward to the volatility. With traders, right? I love to see what moves markets, how markets are moving, how the media is portraying some of the stuff. Yeah, we only get once every 4 years, don't we, as well? So it's from a trader's perspective, I think it's super interesting. Let's let everybody join. I think everybody in the waiting room is in. If you are, welcome. Let's get started. Okay, quick glance over at what's going on at the moment. It's a little bit different tonight. So I don't have a bunch of slides for you. I'm not going to share things that I've kind of got in slide format. I'm going to share my screens in a moment. First of all, we're going to go through a little bit of housekeeping stuff. I've got some notes, so I'm going to kind of be looking around at different screens. So I'm not always going to be looking directly in the camera. It's not me being rude. It's just me knowing that actually we're sharing different parts of the screens here. I have notes to look at as well, so I want to share with you some stuff. So this evening, before we get started, we are going to just remind you, ladies and gentlemen, please, as you may already know, that listen, if you're trading a leveraged, however you like to pronounce it, it's the same thing. Trading on margin is dangerous, right? It's risky. It's you do have the amplified exaggerated losses because it just gets really kind of loses can happen really fast if you're leveraged up. Same with wins, right? The name of the game of traders, we're trying to obviously use leverage to our advantage, but also please do understand that there's not a free lunch here. If you're on the wrong side of a trade and you are using leverage, you're going to lose money quickly. We're trying to be the other side of that, but we have to kind of look at it but in perspective. So manage risk. And also I want to say for this evening, listen, the elections will be volatile. There's going to be volatility across everything. And so you just make sure if you're going to trade that you are aware of the risk. There will be gap risk. There will be low liquidity. The spreads may widen depending on what you're trading. Headline risk, things will be swinging around. So, if you don't want to trade it, you want to sit back with a beer and watch it unfold and kind of take some notes, then you do that. But if you do decide to trade it, if you're experienced, if you know what you're doing, you understand the risks involved, then obviously that's your call. That you're a trader, that's what we're here for. We're here to take advantage of volatility when we can, but just be aware of that, please. And the other thing I wanted to mention is this evening we're doing something a little bit different. We will be going through charts. We will be looking at levels. We'll be talking through potential trade opportunities. I just want to say that this is absolutely not advice. And Pepperstone would hate it if I was to stand here and give advice, and it's not for me to give advice anyway. So don't take anything I say as gospel. This is not me saying trade, do this, do that, do the other. Absolutely not. Things can change very, very quickly. And even from a personal perspective, I might look at one and the price action overrules it and I change it. So it wouldn't make any sense anyway. So I'm not here to give you advice. Don't take it as advice. We're here just to look through some charts together, talk through some trade ideas, talk through some of the risks, some of the things that might play out. So take it with that in mind, right? As we look at charts and we kind of go through and we workshop things together, it is just that, just talking things through. And when you come to the moment you decide to place your trade or not, it's entirely up to you, your risk capital, your decision. We're here as a group to workshop through stuff. So no advice, okay? Got it, right. Let's move on from there. So Election Edge today, we're going to talk about all sorts of stuff. So the idea of today is I'll share my screens and I'm going to run through a few things I think are interesting. And then what I'd like to do is if you want to suggest a market to look at, a trade idea you have, or what you might be looking for on election night, are you trading it, are you not? Then we'll kind of do some sort of interactive Q&A at some point, maybe in the middle of this. Not going to wait right till the very end. Okay, so let's just remind ourselves last webinar, should I say, we went through kind of what happened previously. I'm going to cover some of that in a moment. So we had, what happened with the election, what moved, what was moving, what wasn't moving, all that type of stuff. So what I'm going to do now is I'm going to share my chart. I'm going to bring now back my notes over to this side. I'm going to share with you, not my chart, one specific layout I think is important. So let me switch over. And as always, guys, if you have questions, feel free to add them. This is a very different session to normal. Happy to take questions on the fly today because we don't have anything in a very specific flow that I want to follow. Okay, so let me shift this to here and share this, which should be now the trading screen. Let me just get rid of that. And let me just put that there, which is my notes. And you should now see trading view ticking away. Yes, you do. Good. Okay. So, listen, we've got to be careful we don't get sucked into what ifs. A lot of people are saying this is going to happen if this does this does that. That's bullish. Trump's bullish for this. Harris is bullish for this. We've got to be careful we don't get sucked into that, right? We are traders. Okay, ultimately, we're not here to analyze anything. We are here to make risk-based decisions. If you choose, obviously, to allocate risk capital to this event, we are here to make risk-based decisions. And our job this evening, and the days and weeks after, is to identify when we believe we have edge, right? And one of the things that may well catch many traders out is trading just because there's volatility. One of the golden rules is to not be seduced by volatility. Volatility is great. We thrive on volatility, right? Volatility gives us opportunity to take multiple trades. It gives us opportunity to hold on to winners, to stretch winners. When we have that move that's continuing and we do have kind of two-way trade and kind of decent swings, that's great for us. We don't want a stagnant market. So this is why, this is potentially a good opportunity for traders, right? But just be aware that it is easy to get sucked into stuff just because it's moving. So if you do decide to allocate risk capital to this event, just have it there on your blotter, on your journal. It just says, listen, do not get sucked into everything that's moving. Shiny object, oh, spiked here, spiked there, let me jump on it. That will kill you. It will absolutely guarantee to kill you. The way to trade, or I believe the way to trade high volatile environments or risky environments like this is to be the general, the admiral, if you like. And so you're there observing the fleet and you're looking, we'll talk about this in a moment, kind of from an operational perspective. But we're here, we're calm, we're sitting on our chair, we're sat back, we're relaxed, like all the things are going on, but we're there to look at the bigger picture. And we're here to say, okay, if this does this, then I might consider this. Okay, that's going there. Okay, let me see what happens. Just to calm things down a bit. There's plenty of opportunities, plenty of volatility. We don't need to be chasing stuff. Even if you're an aggressive scalper, very short-term orientated, that's fine. That's really, good for you. I think that'll probably work well in this environment. But the nemesis for you will be, or kryptonite for you will be over trading. And it will be getting caught in something. And if it's fast market and you just don't take that stop, or you get a bit of slippage, you lose a bit more, sizing is a bit high, that's a really, really bad way to be. So just think of it like an admiral. Think of a general. You're like, hey, I'm just going to take my time. I'm going to pick my spots. I'm going to be cool. I'm going to be calm. And we don't get sucked into kind of trading just spikes all over the place. Okay, so let's kind of look at a framework for tonight, and then we'll a framework of how we want to approach it. But the way that I'm looking at it is this. It's like, hey, here's my framework, and I'm going to share with you kind of some different potential ways I'm going to look at this. But price action is going to fill in a big piece of the puzzle on the night. And I'll explain what price action I think, how I will kind of layer that in with my overall vision, and then how risk limits will come into that. By the way, you should by now, if you are deciding to trade it, and of course, going back to the initial risk awareness, that it's highly volatile, all the other good stuff that comes in with it, you should have set your risk limit. So I believe that you go into an election or you go into any kind of headline event like this, or a very significant risk event with, a solid risk limit. It's like, hey, I'm going to risk X amount trading this, and that's it, right? Because I think that's the better approach, is that you're happy with that. You look at that number on the sheet and you go, am I comfortable and okay with losing that amount this evening or over however long you trade, next couple of days? And if the answer is yes, then fine. You trade. But when you go in with vague this and that and the other, I think that's dangerous. So by now, set your risk limits, decide on what you're prepared to risk for the end. I talk about risk a lot. Obviously, I talk about risk. And one is because I want everyone to understand the risks. Two is obviously for compliance. The regulations say we have to share with you how risky this business is, but also from a personal perspective, guys, I hate to see traders losing on almost technicalities, like they're getting sucked into stuff. It's just when their mind goes, the chimp takes control of their mouse, so to speak. They're oversizing. And otherwise, they're good traders and they would make a good trade, but the risk is just not managed. So definitely being fully aware of that. Okay, so I think the next thing is to decide what you're going to focus on this evening. You cannot watch everything, right? If you try and watch everything, you will spread yourself too thin. And your main objective is to just assess price, right? So I've got a layout I'm sharing with you now. And I think the best way to approach this event is to say, right, I have a main trading focus at the market that you're most interested in, and you have other supporting markets. So in this layout, I hopefully sharing you with on this screen here is an example of kind of what I think is a good way to approach stuff. So last week I shared with you an election watch list. So I've got kind of stuff that I'm going to be watching over the election. In this lower tier here, I've got 4 markets that I think are going to react to as we start to see some results come in. Gold, I've got cable, I've got US dollar Mexican, I've got US dollar JPY. I've got Dow here as a main screen because in this might not be the case in the night. We'll go through that in a moment, but that's kind of the thing that I'm most interested in trading. And then I've got another supporting index there, in this case, S&P 500. So I've not got too many on there, but I'm going to have a good idea of how price is responding. So you've got your main market, which you want to trade. And I think you've got to be very careful, don't spread yourself too thin. You need to get a feel for tape. You need to get a feel for price movement. You need to get that feel and that rhythm and understand what's going on. And then supporting markets to see if that's an unusual move for the market you're watching, or we're getting this kind of risk on, risk off type of rhythm across all the markets. The general consensus obviously is, if there's strength in the dollar, strength in the equities market, that's this kind of thing that Trump is supposedly going to support. So there's that. I also am going to personally, and maybe something you do, is have the poly market, or there's Kalshi, which is similar, or Betfair Exchange odds up to see the actual odds of a Trump or a Harris win. Now, why am I doing that? Because what I'm going to do is, well, one time actually I'll have news on, but I want to see as the results start to come through, the exit polls, the swing state results, and I know this is going to take time to play out, but in this evening there will be lots of opportunity, and it also it's going to play out over a few days as well. But what I want to see is as the actual odds change. So I'm a simple trader. I like to just see the odds. As we start to see more odds coming in and swing states coming in or results coming in, whatever it is, and we start to see the odds shift, I want to see how that impacts the markets, right? So if we start seeing, at the moment, I think last time I looked, I couldn't share both screens, but last time I looked, Trump was running on about 60%, something like that. If, let's say, we start to see an increase in odds as some of the results come in, I want to see how the market responds, because the issue we have as traders now, which no one has addressed, is well, I haven't addressed it, but this is the one thing that's like the big unknown, is how much is priced in, what's not, who's positioned where. We don't know, but we'll start to know as the results start to come out. So as the odds shift, if we start to see the odds rising for Trump and becoming 70s, 80s, what happens to dollar pairs? What happens to equities? What happens to gold if you're watching? Now, what happens to the stuff you're watching? Now, if you start to see the equity market rallying on that, you start to see the dollar rallying on that, maybe gold selling off. Gold's a slightly different thing, we'll get to in a moment. Then you can say, okay, maybe there's not so much priced in. Maybe the Trump win is not priced in, and we've got more cash on the sidelines ready to be put to work with the certainty of whatever it is, okay? If it's not if it is priced in, and we start to see those odds rising on the betting markets, we start to see the more likelihood Trump's winning coming through, and we start to see the markets maybe stagnating, maybe selling off the equity markets, dollar, then we can start to calibrate ourselves and say, okay, maybe the Trump win is priced in. Maybe people are already positioned, and this is a sell the news event. Listen, there are so many permutations out there. We've got to be clever and we've got to be smart. But I think that being able to look at how the odds start to swing throughout the evening and maybe the next day and all this type of stuff, and how the markets respond to that, is going to give us as traders, short-term traders, the biggest clue as to, what the market's really doing, how it's thinking, how we could position, is there a trap to be made? Talk about more a trap in a moment. But that's going to give us the biggest clue and help us to calibrate quickly. And my job, and kind of one of the things on my notes this evening is, hey, just get calibrated quickly to what's priced in and what's not. And the way to do that is as we start to see the results, we start to see those odds shift. How are the markets that I'm watching responding? What's moving? What's not? Because I know then that's what's sensitive and that's what is probably going to offer the most opportunity going forward. Hopefully that makes sense. Okay, so as we start to see some of the stuff come through, you kind of just want to relax into it and say, right, listen, I'm set up. My politics are left to one side. There's a few scenarios out there, and I'm not talking about Trump clean sweep or split house and all this type of stuff. We've covered that. That's fine. But from a trader's perspective, which you and I both are, I think there are four sort of outcomes, if you like, for the markets. A Trump win that's already priced in, and so as I touched on earlier, if we start to see the odds of Trump winning and the odds of maybe a clean sweep going higher and higher, what's happening with the markets? Do we see that dollar rally? Do we see the equities rally? If we don't, then I might start to add more weight to this is not priced in, Mark. And so do I then want to start thinking it's a sell the news event? Do I start to want a position for the short side? I'm going to talk about technical stuff in a minute because it's not just as clear as getting direction, as we know. So I might start to think through that. The other one is a Trump win that's not priced in, right? It's not fully priced in, and maybe the clean sweep is there as well, or split, or whatever it might be. There's also its intricacies, but I want to see how the price responds. If we start seeing that big coming in and it's continued and it's aggressive, then maybe I'm like, hey, we're not priced in. Or if it fades out, does it dip? How does price respond? Because price is king. Right? As I said last time, price is what we want to see. But the key to kind of interpreting price on election night is its response to expectations. So as more certainty comes in, then that's going to affect the price, and we want to see how price is affected. Okay, the third scenario to me is a Harris win that's not priced in. That's the unlikely event. I know it's neck and neck in the polls, but actually, if you look at the betting markets, they're slightly more in the favor of a Trump win. So I would be surprised if a Harris win is priced in. Now, Harris could absolutely win, of course, but to me, that scenario number three is it's not priced in. So if we start to see, more of the odds going towards a Democrats win, how does that respond? How do we see the markets respond? Do we see dollar coming off? Do we see equities coming off? Or is there a rally? We just don't know this, right? It's so many times we don't see the response we expect, and so that helps what people are doing, because if you see it moving blue and you see market moving one way, you go, okay, and now I know what people are thinking and how they're positioned. Can it shift? Of course it can, but it gives you a good heads up. And the final one is a contested election. Now, from a personal opinion here, I think there's a reasonable probability of this. This is a really tight election. I don't see any of these sides just taking a close vote, lying down and conceding. A contested election could take weeks to solve. If there's delays, there's legal proceedings. What happens there? If the uncertainty is there, and we start to see uncertainty coming through the news networks, we start to see the pricing kind of going back to 50-50 or very, very close. We start to see some close counts and recounts. Do equities sell off? Now, technically speaking, that's what we should expect, right? Uncertainty, the markets don't like it. And I've gone back and I've looked at other previous elections and uncertainty, and you do see sell-offs. You do see, history says, uncertain. The market doesn't like uncertainty. We know this. Now, does it respond as you'd expect? Probably, but we don't know that. So if there's more uncertainty, then I might look to go, okay, do I want to kind of buy gold here? Do I want to short equities? So I start to calibrate my feelings and trade ideas based on what I see the outcomes are and how the probabilities shift and how the markets I'm watching are shifting. And there's a lot to cover then. I really hope that makes sense. But that's from a trader's perspective, that's how you want to kind of look at stuff. Okay, so as we see the results coming, the betting markets are going to shift and start adjusting. And you kind of see that as well, probably on some of the channels that you're watching as stuff's coming in. And our expectations are Trump win, dollar bid, equities bid, Harris win, etc. Might not always be the case because people are saying inflation is going to go even higher with Trump win. So we just don't know how people are really thinking. We don't know how they're positioned as well, because that matters, right? If people are already loaded the boat in equities, and don't forget, equities are near all-time highs now. Some of the other markets are at those extremes. Does that affect things? I think it does. We'll look at those in a minute. So we start to want to kind of see what's happening. Now, you've got scenarios of rallying that fails, a sell-off, and stagnation. That's a general the price action that we'd expect. a big rally that keeps going and going and going. There's a bid, there's a pullback, there's a flag, that type of stuff. A rally that comes back to where it was, warning sign there. If a market does an attempt to move higher or even lower, and then comes back to its existing price, that's a warning. Right, so watch that. We'll look at some charts in a second. A complete sell-off, not capitulation, but a panic sell-off, and a stagnation of like, who cares? I think that's least likely, but who knows? And then we kind of go, okay, what's our, so if we start to see that, do we then go, okay, what's our priced in scenario playbook? So if we start to see stuff not really moving, if we start to see it rallying and failing or stagnating, and we see Trump starting to become the favorite to win, then do you then go, actually, I've got a bit of a playbook for a priced in scenario playbook. I'm going to sell equities. I'm going to short dollar. That might be where you look and you start to calibrate and consider that. If it starts to become a close call, do we then go to our uncertainty playbook and you write that down and go, what's my uncertainty playbook? And maybe it's buying gold, maybe it's shorting equities, whatever it might be. If it's not priced in, you get the idea. We're clustering these into a ton of playbooks. Okay, so the important thing is we're watching how price reacts to shifts in those different scenarios and the likelihoods and how it all moves. That's our key, right? It's all very well saying Trump's good for the dollar, equities, etc. But if price starts selling off every time we see the Trump odds increasing or every time we see him winning by a bigger margin than expected, we know what the market thinks. The market is, the price is king, man. No one cares about what the analysts say, what the media says. Price is what we need to look at. And the quicker we can calibrate to that, the quicker we can generate those trade ideas and you come up with the way to approach stuff. So, okay, let's go back to the charts here. Right, what have we got? So, so this is my kind of the way I like to look at stuff, and I'm going to have things on different screens, so this would be slightly different, but I think it's a good way of doing things. And rather than overlaying too much, you can kind of get a good idea of what's happening, what's moving. So I'll put everything on a daily, and I'll sort out all my scales and everything like that, and I'll say, okay, what's responding, what's not. Okay, so now on another screen, I want to share with you these things. So before we look at kind of the implied volatility, implied moves, let's go back and hopefully you can see that I've I've put an image onto TradingView. This might be a bit clunky, but I think it works. And this is these are from barchart.com, so give them a credit there, but it's available and accessible online. So this was going back to the 2016. So this was when Trump won the election, but we had this real heavy sell-off initially, lots of uncertainty, and then we had this kind of huge rally afterwards, right? Why am I telling you this? I'm telling you this because, let me show you this one as well. This was the dollar index, and this was 2020. We had a kind of decent rally. 7 p.m. Eastern is when stuff starts to come in, by the way. Well, I've covered that before, but we saw a rally there and we saw a big sell-off here. 7 p.m. Eastern here is when we start to see the exit polls and stuff coming in. We saw a big sell-off here in equities. These are different elections, 2016, 2020. But why I wanted to share those is that the head fake trade is absolutely in my playbook. The head fake trade is, hey, the market moves in one direction with conviction for a period of time, and then reverses. So how you play that is going to be up to you. And you probably should have a basket of stuff you're looking at. Are you looking at equities? Are you looking at Pacific dollar pair? How are you looking at that? But the head fake trade is something that seems to be quite frequent. I think it would be quite rare for us just to go do one direction. So just be aware of that. And there's two reasons to be aware of that. One is from a capitalizing on its perspective, i.e., hey, I see the move in one direction. I'm going to look for a turn. I'm going to look for stuff. We'll look at bits in a moment. Or if you are jumping on things quickly, maybe you want to keep your risk tight. Maybe you want to be very, very cautious about that thing whipping back on you. So that's why it included those. Okay, so let's get rid of that for now. Perhaps I can delete those. Yes, delete them. Okay, so let's go to some of the implied moves. So this is my kind of looking at some of the options expiring Friday. Yeah, I think we took the Fridays. And kind of taking the strikes at the money strikes and seeing what the option prices were. So then kind of a rough guide of what the expectation is. So we will look at the S&P 500, and I'll tell you why this is important in a moment. We're not trading the options, but we want to see what the expected move is. So current price 774. So we're expecting about 140 options pricing, 140-point move between now and the end of the week. Most of that's going to be for this evening, right? So for the markets that I'm watching, I'm framing that and I'm saying, okay, so 2.4% move. If we have half of that's the upside, half that's the downside, fine. You know, whilst I have that, I can now see how price responds to that move. Because don't forget, a lot of people, a lot of institutions, a lot of hedge funds have already hedged their risk, have already traded a lot. We've seen a lot of options volatility increase across the board because of people want insurance. We've seen big kind of spikes in kind of euro US dollar options. We've seen a lot of people positioning and trying to protect themselves, as you would expect, right? This is the game. They're not going to just dump everything they've got. They're going to say, hey, we need some protection here, some insurance just in case something happens. How much do we need to pay? What's the likelihood? They make these commercial decisions, right? So why is it interesting to us? Because if we start to get a movement outside of this, that then becomes unexpected, if you like. So when we start to get these larger than expected moves, that's when people are going to have to do something with their portfolio, with their positioning. So if we, for example, if we start to see, who knows, but let's go through a kind of workshop and idea together. Let's imagine Trump starts to win. Okay, starts to come in with a higher and higher chance of win. We start to see the poly market odds increasing. We start to see the likelihood increasing across the board. And we start to see S&P rally a little bit. And it's a daily chart, by the way. Hopefully you can see. Let me zoom in a little bit for you. We start to see S&P rally a little bit. And let's say it starts to sell off. It starts to sell off. It starts to sell off. It starts to sell off to a point where it's now taking out the day's low, the multi-day low. And like, hang on a second. This is more than the expected move already. Okay. Now we start trading down here under this support level, because this is a really decent support level from a technical perspective, right? We've got a big level here sitting over, and by the way, I'm looking at this CFD, Pepperstone CFD, 5675-ish, right? If we start trading through that, and imagine we've got this scenario where supposed bullish result has happened and we're selling off, then we've got unexpected response in price, and we've got a bigger than expected move. And it could be multiple permutations of that, right? It could be Harris starts to come in. We start to see more of a blue swing. We start to see sell off in equities. When we start to see this type of move where we're getting extended away from the expected range, then that might be where you go as a trader. Okay, I want to position short, but wait, we don't just dive in short and start selling lows. You might be like, hey, I think we've got multiple days of downside here, or multiple hours of downside if you're in that scenario. You've calibrated yourself to see how market responds to the news and to the outcome. You've looked at the odds. You've looked at who the odds are favoring. You've looked at the response and versus what the expected response is. You've looked at the expected movement. You've gone, now's my opportunity as a trader. I am going to wait for an opportunity to express this trade to the short side, but I need to be smart. I need to wait to see a flag. I need to wait to see a pullback to resistance. I need to see something. I don't want to dive straight in. That will kill you. As I said at the beginning, it's so important. Having traded many elections, I just missed a 2000 election. I started in 2001, but I traded watched at least every election since then. I've seen this time and time again. These spikes in one direction, they're whipping back. So you've got to be smart. So, if you were considering that type of move and you saw this downside, that's a very awful draw. You saw this kind of, I'm going to do it better with this. Maybe I can. Here we go. So you kind of saw this movement here, really downside movement. You started to see that, thought that people might be trapped. Maybe it did a head fake to the high side beforehand. You're not diving in short. You're saying, hey, I need to wait. Why have I keep multi back to there? I need to wait till I see perhaps some level of resistance, a spike above, and so I can frame the trade. Very important to think about direction, but how can you express the trade with a really quantified risk? Because that'll catch so many traders out. Don't let it be you. Don't let you get direction right, but just getting caught up in seduced by volatility. Maybe you see it starts to expand the expected range. You start to see momentum in one direction. You start to see, hang on a second, this feels like it could move aggressively. Okay, fine, but wait for a flag. Wait for a retracement that fails. Wait for a little bit of resistance that kind of you can frame against. And as it starts to roll down, you put your stop above here. Just think, like the trader that you are, the technical stuff that but make sure you apply it tonight or in the trading environment, whether you're trading tonight, tomorrow, whatever it is, because your direction is one thing, but framing the trade, and the worst thing ever is when you get pinged out on noise. So just be mindful of that. So that could be one thing, right? You say, okay, we've seen this unexpected move, fine. Or you see the head fake in one direction. Maybe you do get the kind of flush out lower, and then it kind of goes, right, actually, you know what? There's a lot more certainty now. Market feels comfortable. And it starts getting into gear. It starts getting into that chugging rally, in which case, again, you're not chasing it. You say, right, I'll wait for an unwinding. I'll wait for it to pull back to a moving average if that's your thing. But just remember that. And the reason I say that is because it can be forgotten. You're in the heat of the moment. You're forgetting stuff. You're like, this is going to rip. I need to get long. And maybe it does, but if you're chasing that thing and it just unwinds on you and pings you out and goes, it's the worst thing ever. You've got time. You've got time to relax. You've got time to position. You've got time to structure your trade in the right environment, the right way. Okay, so that's our S&P expectations. What else have we got? So look at Dow. I'm going to move that to about there. It's about halfway in it. Got about 940-point move expected on the Dow. So again, bear that in mind. If we start swinging around and pushing lower and lower and lower, maybe you go, okay, is it? And also as well, and I think hopefully this makes sense, is we're always looking at what's causing the move. This is the one time as well that everyone is watching the same thing, right? Everyone is watching the same thing. So if the market's going lower, it's because of what the news is saying or the expectations are. And it might not be what we thought was going to happen. It might be the unexpected response, but that's what's causing the move. It's nothing else. It's driven by the headlines shifting. And so this is not the first time, it's one of the very few times we get to see pure fuel driving the market. And okay, of course we do with earnings and we do with kind of inflation numbers and CPI, etc. But there's other technicals at play there. But this is very, very raw. And so being able to see how price is impacted by some of the news that's coming out. So that's our Dow expectations. I think I've got USD JPY in here. Yeah, this is kind of a little bit damper, less than I would have expected. And gold is running about $60. So gold, I think, is more of the uncertainty. For me, it's more of the uncertainty play. I feel like the long gold play, if we start to see too close to call, recounts being, especially if equities are starting to sell off, is it a short equity play? Is it a long gold play? What's the best momentum? How can you structure the trade most effectively? That's where it comes in for your skill and ability to read that. But, that might be something to consider. Now, Euro is one of the largest, actually, one of the largest ranges. I've got a bit of a spike today, but that's one of the largest ranges in terms of ATR. I kind of always look at the ATR actually rather than the percentage. That's a pretty decent range expected on the euro. Obviously, US dollar Mexican, I don't think I'd get the options from that. But the USD Mexican peso cross is going to be absolutely wild. The spread will be wild. It will be, to me, it's not my thing. Too much, too wild, spread's too crazy. Yeah, but it's going to be a wild one. That it's just kind of interesting to have that there on the China offshore as well. So those are some of the things to look at. Fine. Let's go back to my notes, keep on track. So we have, this is what I was going to say. If we look at these charts, this is my perspective on things. I don't know if it's right. And again, I never know if anything's right. Okay. I always feel that the daily chart matters to a certain extent. I know a lot of people disagree with me on this, but if you look at equities, for example, most people are long, right? We're at equity highs. We had a little bit of stuff, but all intents and purposes, the last how many years over the cycle, we're in their highs. Okay. Same with gold, right? Gold's sitting there at highs, so most people are long. However, you look at something like Euro USD. We're in a multi-year range. I know it's Euro USD. I know it's one of the thickest markets, or the thickest market out there. I get it, right? But to me, it feels like less people care if there's just a bit of volatility around here. Like if it goes to 1.1, it goes back to, not many people are trapped. It's like it's less likely. And this is the trade with me talking here. Whereas if you kind of saw gold, for example, sell off hard, for whatever reason that might do, then you might consider actually a lot of people who are long might be wanting to unwind that position. Same with equities, right? If we saw a sell-off in equities, then my assumption is that everyone's kind of long already and they would want to peel off some risk. And that might cause a bit more downside around here, they might be like, hey, I'm going to take some risk off the table. I don't like what's happened. Maybe there's uncertainty. Maybe it's a whatever happens. It feels like the daily chart matters to me more. That might be the trade in me. I admit it. And listen, anyone says they're an election trading expert is probably not telling the truth because they don't come around often enough to become a really good expert at stuff. You have to kind of, everyone's just finding their way and fumbling along a little bit and going, okay, price action will tell me this and that. They're trying to put together a framework, but as long as you're managing risk, you'll be okay. So that's something to consider is what the daily chart is doing. Okay, so what I wanted to also look at now, someone's put something in the chat. Where are we? You can't see my screen. You must be able to see my screen. After all this, you must be the only person. Someone tell me you can see the screen. I'm pretty sure it's sharing. Someone just give me a nod. Yeah, thank you, Mr. Thank you. That must be you. Boki. What you can do is if you restart and come back in, that might sort it out. Thank you, gents. Thank you. Yeah, okay. I thought that, wouldn't that be a great start to the evening? Oh, you're going into election day and yeah, good. Okay, so let's look at some of the levels. Scanning back at my notes. The head fake trade. My order of preference would be a head fake trade number one. I love that. If we saw where are we? Let's go back to say a 60-minute on the Dow. I do prefer downside stuff, but I'm also aware we're in a bull market. I'm also aware that if it's not that exciting, we probably could just chug back in. And it's kind of like the markets don't like uncertainty. And maybe what's been pausing this bull market has been the uncertainty, and some kind of certainty, whichever it might be, may well be the catalyst that chugs us back in. So I'm aware of that. That's in my mind. But a good scenario would be a head fake in one direction. So let's look at this Dow 60-minute chart, for example. Let's go to here. If we saw, let's do both, right? If we saw kind of, that's the worst color I could have possibly picked. It's because I've changed that to black, isn't it? Let me get that better for everybody, including my eyes. In fact, let's make it, that's better. Who knew it took so long to pick a thing? Right. So I would like to see this type of move here. If we're trading the head fake, sort of a big move lower, maybe does a pop back up, maybe then comes back down, and then we get chug into gear and we kind of get this kind of move, right? That sort of zone here would be kind of a real grade A for me if I saw that. Obviously, I've got to see and this is a bit of a replay back to Trump Clinton, actually. That would, so the chance of getting that probably slim, but some kind of head fake in one direction. Similarly, if we had it the other direction, where we kind of saw this rally, and let's say we thought it was a bit of a relief rally, and then we kind of just saw any sort of pattern that thought that maybe that was a top, and we saw a bunch of trap traders, and then this kind of opportunity here to get that initial head fake rolling back over, that would probably be something I'd be interested in as well. Bearing in mind, we're expecting the moves to start at about 7 p.m. Eastern. So from there till about 9, these shenanigans, and then as stuff starts to come through the night. The other option we have, of course, is if there's uncertainty, we talked about this a minute ago, if that starts to drift lower and price, bearing in mind as well, remember we've got a decent bid in here already today. Now we're unwinding a little bit, but let's see where this closes today. If this closes up, or if this closes down, that changes the game as well. If we're closing back to the kind of the opening print, we know there's a lot of people trapped already from today. If we're closing at highs, then we know, okay, the expectations are this. So yeah, we've got to take everything into consideration. And you know what? There is no right or wrong, and we can hypothesize and we can theorize and we can say, hey, I'd like this type of trade. I'd like to look for this. The uncertainty trade I'd go to gold myself, and I'm kind of probably looking for a bid in gold. If I do see the bid in gold, I do see uncertainty, I'd probably look to buy a flag or something. Let's say this. So if we saw uncertainty, which I still think is a big chance, I can't help it. If we saw uncertainty coming through and we started to see a bid and a flag type scenario dip below, that type of thing would interest me, maybe for a kind of continued rally, something like that. But going back to what I was saying before, I think that it doesn't matter how you position or what you think about stuff, as long as you have your risk managed and you allocate risk capital, anything can happen. There are going to be 5, 6, 7 decent swings on one market over the next couple of days. And you need one, and that's one market. I think there's going to be very many opportunities, and if you remember that, then I think that's exactly the way to trade it. Okay, so let's look at some levels together and see. Now, I'm I'm of two minds here. I kind of think, all right, we levels are important, right? I get it, but also from a certain perspective is, and levels are important from a trap trader's perspective. What's more interesting to me are the levels that are put in after we start to see some of the news come out. That's more interesting because if we start to see highs put in after whatever news comes out, maybe sort of leaning towards Trump, that becomes the line in the sand. That becomes more interesting than some of these current levels. Now, if we were to look at, say, the Dow, oh, wrong one there, look at the Dow here. In fact, let me go back to this because I don't know how good dark is there. Let me go back to this main chart, remove these drawings. Okay, so if we're looking at Dow, right, obviously, I'm going to be looking at this level and go, I know that this is a really decent level just from a general perspective. Sorry, not Dow, this is S&P 500. I know this is going to be a really decent level. So if we start holding below that, I know from a technical perspective, as well as kind of some of the news coming through, then we might see a cascade of stops. And if we might also see a dip below that rips back up. So, some of the bigger, broader levels I think are important. If we get in with near all-time highs, it's a stretch, but over the next few days, we certainly absolutely could. We're not far away, right? That would be obviously a key level, and that would really indicate that there is a lot of risk capital coming in, especially if there is maybe an uncertainty about the outcome, but we're still seeing a bid, then that's all we need to know. Like, this thing's damn bullish. People don't really care what's happening, whether it's Harris, whether it's Trump, they're just buying. And if we see that, and again, this is kind of just brainstorming some of these ideas together, if we see that, then you're like, I know what the real glimpses under that bonnet. I know who's in charge here. Okay, I need to find now a good place to get long. Whether you're waiting for an unwinding, whether you're waiting for support, whether you're buying a momentum breakout, not my thing, but maybe it's yours. You already kind of know and are calibrated. So the first step is to really, calibrate yourself to the conditions, calibrate yourself to what's moving, depending on the news coming out. Once you've got that calibration, then you go, right, what do I want to see now? And that calibration will adjust with an eye. I give you that. It might change. It might be like, oh, we were kind of bullish on this, and now we've shifted. That's your job as a trader, and it might and it will change over the next few days as well. But if you have that as your first port of call, it's unusual because none of us are used to this type of extended calibration, right? We've got to know what's moving the markets, why, and it becomes as simple as red does this to this market, blue does this to this market. If you can distill it down to that, you have a really, really good chance of getting on something good. That's your first port of call. Next, once we've calibrated ourselves to conditions, we go, okay, so do I have a directional edge? Do I believe there's a directional edge? Have we trapped traders first? Have we got a head fake trade there? Or do we think there's going to be persistency of trend? One of those two. And then the third most important thing is, how can I express this trade idea with a decent risk element? So I can't just buy it, I can't just sell it. I need to wait for something. And that's when it comes in, hey, I want the high tight flag. I want the pullback to support. I want this. And that's for you to decide and jot down. There's your framework. And then once you've got your framework, the market you're looking for, you're calibrated, you know exactly what you're headed to and why you're headed to it, that will just make life a lot easier. Okay, so trade ideas. Talked about that. Gold, buying gold on certain. Let's look at some of the levels on gold. Again, this is just me brainstorming stuff. This is not advice. Usual disclaimers, please, ladies and gentlemen. Okay, so gold, there's plenty of room to the upside here. The expected move might take us up to here, but if there is uncertainty and if people start to buy gold because of the uncertainty, and let's be honest, this is kind of one of those hotly contested elections ever. It's the closest election ever. I believe they're boarding up things and they're expecting some kind of civil unrest to a certain extent. Will people then be buying gold aggressively? Maybe. If so, do we start to break out? We've got all-time highs here. We've got room to move. That's definitely on my radar. Levels to watch, probably be this 2700 down here, 2715. If we started sniffing that and then bouncing back up, I think that's pretty decent to watch that. Again, levels are a funny one. They matter, but they don't. Like I said, I think the levels that we see short-term perspective intraday are going to be more interesting than the kind of current levels, apart from all-time highs. Why? Because when people are buying gold or selling gold, they're not really looking at the levels. They're like, I'm doing it for the reason other than this. I'm doing it because the fundamentals of the US have changed in my eyes. whatever that may be. We're now a Democrat clean sweep. We're now this, we're now that. We've got uncertainty. The fundamentals have repriced my assessment of the US economy and the US as a country. And I believe that gold is the best way to express that. That's what people are thinking. And so because that's such a big shift in thinking, then the levels become less impactful, right? I'm not saying they're not valid, but they become less impactful. It's like in equities, right? If they think, okay, well, we're all aboard the Dow. We think the Dow's going to rip. We think that's the best way of expressing this idea. They're not going to be thinking, oh, we struggled at 42.5 last week. Thinking like, hey, the market in general is repriced in our eyes, rightly or wrongly for them. But we believe the US, these Dow 30 companies, are going to be significantly more valuable in the future. And so we're buying now because of X, Y, Z, whatever it might be, whether Trump win, Harris win, however they perceive it. And so the levels become a little bit less meaningful in my eyes. It's the price response. Like, I know I'm banging, beating, and flogging dead horse here and broken record, but honestly, the price response is going to tell us, so much. And if we can just sit back and relax and do this type of stuff. Okay, so what else have I got you? Okay, so a couple of trade ideas. People sent these me before. All right. Who has this good idea to run through a chart, to look at some stuff? I had this message from someone who was saying, buying gold uncertainty. What will you look for? Okay, so right. The way I look at price and the way I look at markets is that directional bias is one thing. Okay, that's fine. And let's imagine you say, okay, let's go back to gold actually, so we can make it clear. So, okay, so let's imagine you're buying gold for whatever reason. You think, okay, there's uncertainty over the result. You think that's going to take a long time to play out, and you think that actually buying gold as opposed to selling equities might be the position for you. And you might actually say, you know what, we're in a bull market in gold anyway. I feel like the wind's behind me. I feel like the fundamental inflation and whatever other reason for gold going up is still in play. I just want to get long gold. Fine, up to you. You make the decision. Now, here's the extra piece of the puzzle. What do you want to look for to get long? And this is the biggest error that many traders make. They say, I want to go buy long. I want to go long gold. I want to buy it. They buy it. And it chops around. It annoys them. It does this. And that just doesn't work. So there's kind of, we want to have a few things that you want to look for, right? Especially with elections. So let's say you do want to do that. You want to buy gold. Uncertainty starts to come out. You say, I want to buy gold. Okay. First of all, you want to see gold responding positively or to the upside to the uncertainty. There's your calibration. Uncertainty, whoops, sugar, gold's moving higher. Okay. Now I know that uncertainty means people are buying gold. Okay. Good. Now I might want to look for the extra layer, which is what technical pattern do I need to see to express that trade idea? So that could be, get back on that. That could be a rally that holds, right? You find some layer of support and you go, hey, I want to see a rally that holds. That looks more like a flag, doesn't it? But you get the idea, right? You get something that actually finds some support and you go, I want to get long, but I know now I can structure my trade around a key level that's just started to reveal itself after the news has started to come out. And you know that if things change, that's where your stop's going to be. So that's the last piece of the puzzle. Or you go, okay, I want a high type flag. I want to see momentum and I'm happy to buy momentum, but I want to see it flagging. Or you say, hey, I want to see it kind of, rally, pull lower, dip down, take out the lows and then go. So there's got to be some structure to it. And the key with any of the structures that you want is that you have a place to put your stop loss. And again, risk, we're going back to risk, but it's so important. If you've allocated a certain amount of risk capital to this election, then you want to be able to express the idea with the least amount of risk possible. Because, something that is absolutely for sure, in my opinion anyway, is that this election, this is an unusual time with trading in that, we really want to look for those asymmetrical risk reward trades. High probability trades, I don't actually think are easy to assess in these conditions. And what I mean by that is, maybe you trade normally the NASDAQ, maybe you normally trade the DAX, whatever it might be. We've got a high probability of filling this gap. We've got a high probability of testing the prior day's high when we've had a trend day before. We've got a high, you get because you learn the market, you understand the market, you become a specialist in it, right? And so maybe you take trades that haven't got a great risk reward ratio, but they've got a high probability, so it makes up, so the expectancy of the expected value of the trade goes up or stays at a decent level. I think when we're trading the election, and again, my perspective on stuff or my thoughts on it is that I want to have those really asymmetrical bets. I don't know what's high probability. There's not an environment I'm used to trading. It's very, very different anyway. I've traded multiple elections, but this is very, very different, got different parameters. And so what I mean by that is I don't know whether we're going to go higher or lower. I have an idea. Of course, I have a thesis, and I build that thesis and I calibrate to the stuff that's come in and have that idea. But the main thing for me is I have the asymmetrical risk reward ratio. So I'm looking for 3, 4, 5, 10 plus to 1. I want to see that potential before I take the trade, which is a subtle distinction to how you might trade normally during the trading day, where you might be happy to take 2 to 1, 1.5 to 1, 1 to 1 even, but you have a high probability of success. You put an 80% chance on it because it's a very specific pattern you've seen play out, play out, play out again. We don't have that here. So for me, it's like, okay, I need to see the asymmetrical trade. I need to see that decent risk reward ratio. And the only way to frame that is to what we're doing now is to actually find a technical place to put the stop where the idea of the trade is negated. And so putting all the pieces of the puzzle together, I want that asymmetric. I want to calibrate. I want an asymmetrical risk reward ratio, and I need to find a place to express the trade. Now, the market could just rip off. You want to get long gold and it just rips and rips and rips. You go, fine, it's gone. The trade's gone without me. Your job as a trader is to be able to allocate risk capital to that idea with a quantifiable risk. Not many of us can just buy stuff and keep buying and buying and buying and hope it goes up, because one day it's not going to work. So being mindful about that. So there's the kind of steps there. Okay, so another trade idea I had come in was see what happens the day at the open. Okay, next day at the open. And look to buy Chevron or Exxon if Trump. Okay, so this is going to stocks. Yeah, okay, this makes sense. So if we go to Exxon Mobil, oil company, theoretically, Trump's going to be bullish for oil. It's going to be bullish for defense and stuff like this. And I said, I really think it's important to have a US election watch list. Why? Because in the night, obviously, the movements are going to be in the FX market, the indices, 24/5 stuff. The next day, tomorrow, so Wednesday, Thursday, Friday, we're going to see how some of these companies that are very, very sensitive to this stuff respond. Okay, so then you're recalibrating again, recalibrate. Okay, so the idea was I want to wait till the dust settles, and if Trump starts to look like the likely winner, I want to buy ExxonMobil or Chevron. I think that's exactly a good trade to take, but you want to see the price responses as you'd expect. So our expectations is Trump is going to be good for ExxonMobil. He is pro fossil fuel. He is reducing pledge to reduce corporation tax, less regulation, blah blah blah, all that type of stuff. That's what he said. Politics aside, doesn't matter. So we'd expect to see, as the Trump odds started to increase in Polymarket or Kalshi or whatever you're watching, or on the news, however they're going to report it, you would expect to see that the open, that we get a sustained bid. And so if that's your trade idea, you want to see that your idea is actually playing out as expected. And then and then again, you say, right, well, I think it's going to play out for multiple days. I'm a swing trader. I want to see day one. I want to see it pull back. You structure it again in a place that you can put your stop in. Otherwise you're just stabbing at it. Yes, to be very, very mindful of that. So there's the same with, and actually if we go back to the 20, if I had the right thing, on 2020, I want to say we were in. There we go. Yeah. I think I covered this in the last slide, but no, it wasn't 2020. That was the Biden thing. Here we go. 2016, of course, Trump won against Hillary. US Steel, very, very pro-Trump, infrastructure, blah, blah, all the stuff that you'd think would do well. Big gap up. Then we saw a big kind of 60% move. And so if you whoever wrote that idea of trading Chevron or ExxonMobil, if you don't think it's priced in and you see this kind of strength, then maybe you kind of want to position. If you're a swing trader, you might say, hey, I want to wait for some support. And the type of thing you wait for is this. Is this type of thing here. Little 3-day support that you buy. You let it play out, and then or you trade an opening range breakout type thing. You say, I'm going to take an opening range breakout. Be mindful day one, if there's a big gap, that might disappear. So if you are interested in trading the stocks when the bell goes tomorrow, that big open might be priced in. Might be big volume, but it might be that's just done for the day, as it kind of was here. So that would be your Chevron trade or your Exxon Mobil trade. But again, I think the key is to make sure you're calibrated. That's the biggest takeaway. Peter says Fed on Thursday. Of course, Fed is on Thursday. Thank you, Peter, for a reminder. Kind of all eyes have been on election, but actually there's a almost certain chance of a 25 basis point cut on Thursday. Does that? It's amazing actually how much probability they've given to that, considering anything can happen in the election. But hey, I guess it's kind of unimportant. So there's that to add to the mix, of course. But also, I think here's what I think actually is more likely to happen. Right? Is and again, it's just me just guessing. Right? I haven't got a clue. Got no idea. But if someone said to me, what do you think is going to happen? And I was sitting there and I was a few beers deep and I'm like chatting about stuff and, we're having a curry with Peter and Imran and we had a few beers. Like, what do you think is going to happen? I think I'd say I think we'll get uncertainty. I think we're so close to call. I think that we may see some risk off and a little bit of fear, if you like, as the results are not clear and as people start saying, well, we're going to contest this, we're going to do this. And we kind of dip off a little bit. And then as it starts to resolve, maybe we catch a bit again. I don't know. No idea. That would be a playbook for me. Something that happens like that. Or we see a bit of uncertainty. It lasts for a few hours maybe. And then everyone goes, we're in a bull market. Fed's cutting on Thursday. We're buying. And that becomes the overall narrative. And the election just plays out. It's almost like a second thing. It's like the bull market is the bull market and we're buying the bull market and we're perceived that this kind of short-term dip is a buying opportunity. That might be one thing that plays out. But yeah, nobody knows, guys. The summary is just to make sure you have, allocated your risk capital, where to express the trade idea. I do think this is a day for looking for the asymmetrical risk reward trades. Personally, I think it's an unusual event and you need that. You need that payoff. You need to get those 3, 4, 5, 10 to 1 possibles. Adding to trades, be careful because things can change in an instant and you might be on the best possible technical trade. You might have the most beautiful entry and it's working your way. And then something comes out unusual. This is headline risk after headline risk after headline risk and just snaps things back. And if you've scaled in so much into that trade, you've worsened off your average price. Yes, you're going to be, obviously making more money as it goes in your direction, but one swing against you and you're out of the deal. So mindful of that. Just be careful. If you are taking a trade and you are holding it, the earlier in the night you take it, the more headline risk you're going to have to sit through. And the trade could still be right, but you only take a couple of swings the other way to ping you out. So that's something to be aware of. The later on in the evening or tomorrow, the calmer things get and the less headline risk is there that comes into it. It's still going to be headline risk, but you kind of minimize that to a certain degree. And yeah, where to express the trade idea is the final thing on the summary. Just being smart about where you're going to execute. And there's just so much opportunity. Just be calm, be cool, relax, act like an admiral or a general. Just observe, decide where you're going to enter, see how things play out. And if it's not for you, sit there, crack open a beer, watch it, make some notes, and you're ready to trade the rest of the week as normal. Okay. Let's see what happens. Time is 6 p.m. I know it's not. It's 7 p.m. UK time. We are expecting, what have we got now? Probably another 5 hours or so until we see the first exit polls things start to come in. So yeah, for me, quick gym session, relax a little bit, come back to the screens and trying to trust that price action will reveal itself. Something Peter always says is, you want a trade to slap you around the face. You're a trader, you kind of know what to look for. There is going to be so many opportunities presenting themselves this evening over the next few days. You don't need to take each one. You need to relax, drop your shoulders and say, the market will tell you. This sounds a bit woo-woo, but if you're experienced in trade or some experience in the markets, the intuition and judgment you've built up over the time, whether you've got 50 years, whether you've got 5 years or 5 months, right? 5 months, maybe not so. You kind of got to be more structured, but still, you want to be able to see something that just goes, boom, this is the trade. It's the right direction. It's the right idea. People are trapped if that's your thing. It's a good place for my stop. I've got a good potential on this. This is the one. And it should feel, trading should feel that relaxed. When you open that ticket and you kind of put your order in and you kind of assess it, you kind of calm. You're not rushing things. You see it, you're like, that's the trade I want. Been waiting for you. There you are, baby. I see you. I'm going to take it. Click. And you sit back, you relax, you try and manage the trade. What levels are you going to start to ratchet the stop up? Are you going to make adjustments? How long are you going to hold it for? It should be easy decisions. Whenever it's tense, whenever you're rushing a decision, it's probably the wrong decision. So just be very, very mindful of that. Relax into stuff. There's so much opportunity. You don't need to force anything in this, especially in the election. You think about this. How many opportunities do you really need? If you get a good 5+ to 1, you don't need that many. You don't need that many. So play it safe. Play it safe. And as Peter says in the chat, clean, crisp, obvious. You want it to be an easy trade to make. And I don't mean easy by I'm going to buy this high because I think this is an easy kind of scalp. It's like it just fits right, it's structured right, you're calibrated right, you've seen the stuff you want to see. Whatever your playbook is, it starts to match up. So let's see what happens. Is a Trump victory priced in? Is there uncertainty out there? What are you going to watch at? Get your watch list set up. Just decide how much risk capital you're going to take, all that other good stuff. And I shall wish you good luck, I guess. Is good luck the right thing to say? I guess it is. But just good trading, guys. Keep the risk managed, please. Live to fight another day if you need to. The market is going to be here forever. So even if you sit back and watch and learn, that's a cool thing. Take it easy. Keep risk managed, guys. Bye-bye. And they've moved the button that stops the whole thing. Of course they have, because Zoom has been updated. Let me scan through. Used to have a nice big button that said end the webinar. But in their wisdom, they have, I can stop sharing as a start. And I can end the call with that button. Finally got there. This is this won't be like this in the election. I promise you, it'll be better. All right, guys, take care. See you later. Bye bye.